Okay, so you're making profit this week, right?
Actually, sir.
Okay, that makes sense. So I can recall that you asked a question on the comment section. Yeah, on the group the other day about your account size. So your account balance is very low. Trading with minimum deposit is not an ideal for trading. Um, why you trade that little amount is affordability, and to just make sure that, as people that are starting out in trading, you want to test the waters, you want to see how this is really working, right? So that's why we encourage, okay, you can start with a minimum deposit, but you cannot really be able to stay on that for consistency's sake and for profitability's sake. Longevity, if you want to scale, it's going to be difficult. So you cannot trade more than one position. One way, if you trade more than one position, either by higher leverage, if you have a little bit retracement, because the minimum volume you can trade is going to be 0.01. And in some cases, if you have 20 pip stop loss, if you have 30 pip stop loss, 0.01, it might risk you up to like $5, risking you up to like $5 of $20 deposit. You're going to look as if your account is almost like 40% gone. But in reality, you cannot trade lower than that, because brokers do not offer you um,
Yeah.
any a nano lot for trading, like 0.0001, right? So, but somebody that was trading $100 account wouldn't be that emotional or be afraid to trade, or having that stop loss level of $5 floating, $10 floating, and all of that. And I can take more than one position. So that's why when we encourage you to start up with a minimum deposit, you have to do your very best to get to level where you can have up to $100, $200, even to $500 and above equity. They call it equity. So your capital is your shield. If you don't have capital in this business, it's more like you're playing, because you may not be able to see that money that much, and it's gonna be like everyone else is profitable and you're not, and you're being left behind. So, quick one, guys, before we start the analysis this morning. I just want you guys to know that this is business. Trading is business. Recently, I've seen people post about Ponzi investment schemes that people brought in. They brought in that one, they brought in this one. I see what is common about those set of people that invested in that program is the fact that they don't want to learn. They want to skip the process. If you want to skip the process, I understand that some people have two jobs. They work in this job, they work on that job, they have other professions, they have other skills, career that they're comfortable with. Maybe they're making lots of money, from those industry. That's very good. Then, if you want to diversify, if you want to get into investment, you have to learn how investment work. You have to learn how schemes work, so that you can know the right platform to invest on. And it doesn't mean that something is very much popular that is legitimate. No, popularity does not guarantee that the fact that something could be going wrong. Some of us here now, we understand those schemes. We've seen those platforms. Some of them we participated in the time past. We know how the algorithm works. We know how the system works. So, but a common person outside that is not a forex trader, or maybe just heard of forex and crypto, as long as they can give them a platform to log in and sign up, and put money inside, they want to believe that, oh, they're going to make money. And how does you make the money? If you don't ask the question, where is this money coming from? What kind of risks and strategy is this person? This money doesn't grow on trees. You don't go and plug money anywhere. You work for money, or money works for you. You have to. The work has to be done, and risk has to be taken. So people have to come to a point where they enjoy the process of learning, getting information, getting the right knowledge. Then you now do applied knowledge. You have to now come and apply what you have learned from theory to practical. And the process of learning, you're gonna be sure of, cross-checking your criteria, double checking everything, and be sure that, okay, this is where it is. You have full knowledge before you jump into something. A lot of people have lost money recently because of some of those schemes, and I'm just not gonna mention them, but it's fine. We that are the traders here, we are still on top of our game day to day. We know that when we wake up, we are going to chat. When we sleep, we know that our money is safe, right? If we take losses, we know how come about our losses. When we take profit, we know we did a good job at that moment and we took profit. So that being said, I want you guys to be careful out there, and I want to encourage you, everyone, to make sure that you pay attention to learning. This learning is not going to be forever. You know, imagine that I'm still coming out here to do analysis. I'm trying to do analysis with you guys, and all of that, sharing the knowledge that I have. So it's a school of no return. You constantly have to be in position where you get information. Get information is about it, and the right information. So let's go rightly into our today's price action. You know the way it is. We don't take much time. I want to show you how we were able to take some few trades that we took this week. We took trades on Europe GBP. We took trade on AUD USD, if I don't make mistake. Europe GBP, Europe USD. Yeah, we did not take trade on AUD USD, but we're waiting to take trade on AUD USD. I'm going to show you exactly what we're looking at, AUD USD. But first of all, let's look at this Europe GBP, how we take that trade. I think I dropped one screenshot like that, one chat like that, and asked some questions about price action. If we expect the market to buy or sell, certainly. So yes, I think I make some example of what is possible on that image. You can see this chart here. I told you that price action repeats, patterns repeat, market structure repeats, cycles repeat. So if you understand what you're trading, you will be able to identify these market cycles, these price actions, and then you'll be able to do what? To know when the opportunities show up for you. Now look at this. What do you really need to trade? You just need to understand the market theory. I've mentioned this a couple of times. You need to understand the market theory, which is derived from the Falcon strategy. So I trade the Falcon-based strategy, just coupled with other differences on how I interpret the market for me as a price action trader. So now look at this. This is the channel, and this channel that you're seeing here, you put your trend lines, put your red lines, and you have a trading channel. And in Falcons, we always have what we call override structures, and we have what we call pattern separation. So basically, when do we have a pattern separation? It's where we have this breakout, this volume here. If you notice, one price action, I can't remember what pay was that, but we have something similar like this. Now, since we have this breakout from this pattern, where the entire structure is being separated, and this is an impulsive move, right? And this was entirely a bearish market until the consolidation first, and the first move started here, and the second move gave us this corrective phase. This is entirely a corrective phase here. Okay, let me not use this. Okay, here something. Let me get a drawing tool. So I want to show you. Oh. Not sure I can get the tool I'm looking for right now, but this is what I'm trying to say. This entirely place is the corrective phase of the market. Now, this corrective phase, this was the first impulsive. After this correction, first impulsive, correction, second impulsive. What we expected, like I said before, is going to be what? A corrective phase right here. This is Europe, British pound. A corrective phase right here. We had this similar scenario on Europe USD. Yes, I can remember now, and AUD USD. So this is a corrective phase. So what do we expect? We did not catch this impulsive movement. We were not on this trade, right? So since we're not on that trade, it was expected of us to wait for when a high is is solidified, like a high is created. And how do you know when a high is created? I've said it before. You need to have more like multiple candlestick formation, not a single candlestick. You know, at least you need to have maybe three, not three, 5 to 15 candlestick to create a swing high or a swing low. So this let us understand that between here and here, this is a valid high because this gave us a multiple candle in opposite direction. So what else do we expect? We want to expect a retracement, and that retracement should be between 50% to 61% retracement. And that retracement is what we call the corrective phase. Is what we call the corrective phase. So after getting our low, we get our high. We want to get the corrective phase because we understand that price action, the market phase started from this move, gave us the first corrective phase, and so it gave us another impulsive move. The next is for it to create a high for us, a swing high for us, and then we now expect a retracement, and then we now do what? Expect a continuation of the buy. So yeah, we entered this trade early because I think we entered at 38%. That's where we are. We had our first entry, 38%, and we had this low that was left, and then our stop loss was just around this level because we needed to give price the space to react within this low. So we entered as 38%, and the price bounced at 50%. I would have called on for a second entry. Personally, I took some second entry here, but the thing is, you guys wouldn't know how to manage much of a second entry trading. So it's best you just have entry one and stop loss, unless otherwise I will call in for a second entry. So what are we seeing on this price action? We are expecting a continuation. Yeah, we're expecting a continuation. Yes, we have this bearish that is coming here, and it looks like it's strong. The only way though we can have this counter trend and a change of direction, because if you want to see now, you're going to see like it's going to form like a reversal, possible reversal, something like a head and shoulder, but it's not really. If you look at here, excuse me, let me delete this. Hold on. I don't know why that doesn't want to delete though, but this is what I'm trying to show you. If you look at this high, okay, thank you. If you look at this high right here, now this high right here serves as a left shoulder, and here serve as a high, as a head. So left shoulder as a head. So what we might expect will be for price to come over from here to test this left shoulder, something like this. Probably come back here and do a continuation, depending on the strength, on the volume, or we might have something like this, come back, respect here, after taking out the left shoulder, respect there, and come back and bounce off and have a sell-off. Why should we expect this sell-off? Is because of this low that is here. This low is very obvious for me that price can take that low out. This double bottom that you're seeing here is too clean to just be left behind, right? So, but we have a scenario because we are now trading in a corrective phase, so we understand what could happen in this phase. Nevertheless, this phase can form a larger flag. This phase can form what we call a large flag. So price can be going up, coming down. Internal structure, right? Internal structure can be very confusing. So it could be going up, coming down. At the end of the day, it ends up forming a very good big bullish flag. Maybe it does something like this, back again, and still give a bullish flag. Notice something here. If you want to notice something here, you'll see that that will give us this price action. That will give us this price action, which is still very clear, a bullish pattern. So if this should happen, if this scenario should play out, this is what you're seeing. First impulsive. This is what you should see. First impulsive, we have a corrective phase here, like a retracement. A second impulsive, and now we have this entire nature, this entire place as a corrective phase, and we have the bigger picture, because if price expand the way it is right now, it is very possible that it's going to create a very big and expandable structure before it can now go back to direction where it's going. So that is important of understanding the dynamics and the market theory, but understand that in a bigger picture, price has breakouts, price has given us pattern separation, and in such manner, it is bullish for us. So, however, we might have short-term sales, but we have to look at how the price is formed. If it's forming correctively, or if it's forming impulsively. So if it forms impulsively, we can understand the change of character and all of that. If it's forming correctively, then we will understand what to do. So whatever is happening inside here internally is within the structure and it's within the patterns. So it's playing out internal patterns, and that way we have a clue of what might happen. So is it okay for us to buy around this area? Yeah, if we want to buy around this area, like I've explained all these scenarios that could possibly happen, that means that you have to stay away from these two lows, this low, and this you have to also give it a price. Maybe your SL is supposed to be maybe within this previous support level, because you want to stay out from this low, because you can expect price expansion into those areas before it move up to the upside, because we already have a very clear bias right here. The market is bullish, so that's how we're looking at the Europe GBP. We're still looking at him to give us opportunity. If it drops more and come back to take this low, I will buy. But if it doesn't drop more and come back to take this low, and I will observe the price action here, if you take out this other previous high and give me a little bit of opportunity, I will buy day, but I will keep my SL away from these two lows and hold it down to upside. So that is the price action for Europe GBP. So let's look at the Europe USD. Now, observe something, because we're going to come back. We're going to see the similar price action on that Europe USD and even AUD USD. There's a reason why I did not give AUD USD signal. Maybe we should go to AUD USD first. Let me show you something on AUD USD. What I'm actually waiting for on AUD USD, and when I'm going to take an advantage of this. All right. So look at AUD USD here. Now, this is a very clear example of impulsive correction and impulsive move. Okay, so look at this price action. This is 4 hours time frame. This entire move, right from this high, hold on, right from this this is the high, the beginning of that trend, and this is a significant high as well. So now, right from this high to where we have this low, this particular low here, right? So where we have this particular low here is considered to be an impulsive movement. If you want to go to higher time frame, like daily time frame, you will see the volume, the way it created the volume. We only have 1 or 2 significant retracement, which is this high. This was a retracement, a pullback, and also a corrective phase before the continuation of this. So now look at this. The same thing I said before. This is one impulsive movement, a corrective phase, and what? Impulsive movement. So the cycle is just 1, 2, 3. It plays out 1, 2, 3. It plays out. So now look at this on a daily time frame. A strong impulsive, a corrective phase, and a sell-off. But notice what happened. Because after this sell-off, what we're supposed to be a corrective phase. And we have different patterns to which we have a corrective phase. And the corrective phase is actually supposed to be a continuation phase of the trend. That's why we said we trade either a continuation or a reversal. Continuation or reversal. But what happened here is price bounced back impulsively immediately after it gave us the sell-off. And what happens here is that it bounced back and given us equal volume. And what do we understand about volume? Volume simply means that one way or the other, one player is bigger than other player in the market at that moment, right? So what do I expect? This might end up forming a bigger and a bigger picture of the market. The nature here is bearish. So this phase is supposed to be a corrective phase, but it's not coming as a corrective phase. It's coming as an impulsive phase because we have a very big volume that came in. So what is the expectation? The expectation is that we want to see a push up because it might end up creating a very large flag, something like this. Let me show you. You might end up creating something like this around this level. Press action. You might end up creating something like this. So what I'm looking at is I want this to be taken out. I want these highs to be taken out. So right now, because of this equal volume, this equal momentum right here, it's very high probable that this high, this is daily time frame. Let me show you on the 4 hours time frame. It's very high probable that these highs that you're seeing here, this high you're seeing here, to all of this price action you're seeing here, likely is going to be taken out. Until that is taken out, I will not be looking for a sell for now. Yes, if you even check around, some people have forecasted price action to sell off from here. Yes, it could sell, but this is so clean for him to leave behind because of this impulsive movement that is given back. So he needs to take those liquidity, if you want to call that, out before we start having a break of market structure, a reversal pattern to be able to go off for a sell. So I'm basically waiting for 4 hours and I'm on AUD USD to take out the highs. In fact, if you would even ask me, I would rather buy this market right here. I would rather want to position myself on AUD USD here and take out these highs than to sell on this level. So that is the nature of the market. This is on the opposite side, bearish. Now let's look at Europe USD. Yes. Okay. So if you notice, Europe GBP has that similar scenario that we talk about on Europe USD now. The similar Europe USD has similar thing we talk about on Europe GBP. Now look at this, same thing. Similar. Look at this. This is the corrective phase. This was the breakout. This is the corrective phase. This is the impulsive phase. Now look at how large this pattern was formed. This is 4 hours time frame. Look at how large this corrective phase was formed. This was really big, of a corrective nature. So this was really, really big. This was really, really big. Now, let me show you again on that Europe GBP. Europe GBP. Take a look at that price action. You could see something similar like that. So you can see this face. You can see how this is forming. Look at this particular um, look at this particular face. So what do we expect? We simply expect these markets to move to the upside.
The network is bad, sir.
All right, guys. Sorry about that. Internet just got messed up. Sorry, I lost my connection, and I can